The good news is there are some new income-oriented investments out there, and we're going to talk about them today. And let me just show you the chart of the yields. All four of these securities have been issued this year. Okay, and this is a chart that shows their effective yields at different points in time since they were issued. So the first one that came to market was STRK. That's the ticker symbol. These trade like stocks.
Okay.
So they trade every day, just like Tesla does on the stock exchange.
Sure.
And when it first came to market, it was yielding about 10%.
Hmm.
And you can see that over time the yield went down. The yield went down because the price went up
Right.
because it pays a fixed rate. And we'll get into the details in a minute as to how this all works. But at one point it was yielding just above 6%. And since then it's gone back up a little bit. The price has come down and the yield has gone up.
Right.
It's now yielding over 8%.
Okay.
There was another security that came to market, STRF.
Hmm.
That came to market. Its yield is around 12, and you can see a similar kind of trend, kind of moved down in parallel and then moved
Right.
back up a little bit.
Right.
And then two other more recent ones as well. So we'll get into the details here. So what are these different securities? Well, there's four of them: STRC, STRD, STRF, STRK.
Okay.
Yeah, this is stretch, this is stride, this is strife, and this is strike.
Okay. And I also like Stripe better than Strife.
Yeah, right. Yeah.
Okay.
Okay.
Right.
Now, this is actually a very important chart
Okay.
because it kind of shows the yield on different investments
Okay.
over different time frames. And we in the fixed income world, you sort of look at time in the terms of duration.
Sure.
Basically, how long does it take to get your money back?
Right.
Okay. So, a leveraged loan kind of investment that might be yielding 6.5, almost 7% might have a very short duration.
Hmm.
Okay. Junk bonds might have a shorter duration, preferred stocks, mortgage-backed securities, long-term treasury bonds. So there's different time periods associated with different investments.
Hmm.
And there's something called, as you know, the yield curve,
Sure.
and it shows the yields over different periods of time. Typically, in a normal environment, the return or the yield on a short-term investment is lower than the yield on a longer-term investment.
Exactly.
But
Mhm.
that's not always the case. Sometimes the yield curve inverts and it's the opposite.
And people
Okay.
who my channel, we've talked a lot about the inverted yield curve last year. Yeah.
Yeah. Now, these securities are positioned so that they have a higher yield for a given duration than basically anything else that's out there that's
Okay.
worth investing in.
All right.
Okay. So we'll talk about the details here in a second.
And typically, of course, when you have a higher yield, you generally think higher risk.
Yes.
Okay.
Yes. Not all the time. Now, risk is an interesting word because risk can mean interest rate risk.
Right.
And certainly on this previous chart, you're taking more risk here because the duration's longer. So if interest rates go up,
Hmm.
all things being equal, the price of these securities should come down.
Right.
And vice versa. If interest rates decline,
Mhm.
then the price of these should go up. So that's a form of risk, but it's a reward potentially too if rates go down.
Hmm. Hmm.
Now, there's always the risk too of losing money.
Right.
And one of the things in the fixed income world is this idea of which investment is more senior versus junior. In the event of bankruptcy, which ones get paid off first?
Yeah.
So they've structured this so that STRF is the most senior security, followed by STRC,
Hmm.
STRK, and then STRD.
Hmm.
Okay, so there's a hierarchy of which ones to get paid off first in the event of a bankruptcy.
Got it.
And if you're the equity holder, you don't, you're the last in line. Okay.
So, so in this particular case, you're having, oh, this is just the security issue. This is nothing to do with the interest rate or just which one gets paid off first.
This is just showing the
Okay.
seniority.
Okay.
Yeah. And then also in this chart, it's showing a volatility. So these investments have also been designed to be more volatile,
Hmm.
medium volatile, and then really almost no volatility or very little volatility.
I see.
Okay. I can't say no volatility because
Right.
these do trade on a stock exchange. So there will be the volatility just every day of trading.
Sure.
But this one should be very move within a tighter band than STRK does.
Okay.
Okay. And I'll show you why in a second. Let's start with STRK first. It was the first one that was issued. Okay. The company positions us as structured Bitcoin. Well, what the heck does that mean? For a lot of people, and I would almost hazard to say most people at this point, think of Bitcoin as a super high risk investment.
Right.
And yes, historically it's been tremendously volatile. This investment is a way to get some upside exposure indirectly to Bitcoin, but while earning a nice level of income along the way.
Okay.
So they think that that's appealing to many investors who, you know, they're curious about Bitcoin. They want to maybe want to invest some, but just uncomfortable with the crazy volatility.
Mhm.
But if you got paid, 8% along the way, how does that sound?
Right.
Okay. So they say growth-oriented income investors seeking Bitcoin exposure, but with yield protection. The yield protection is a guaranteed 8% rate.
Hmm.
Okay. So it's got an 8% dividend, not interest. So the interesting thing about this, Randy,
Oh,
is that it should be taxed as a qualified dividend, just like a stock dividend is,
hmm.
meaning that it's taxed at capital gains rates
Okay.
versus income tax rates.
Okay. All right.
Okay, so if you hold these in a non-retirement account, that matters in terms of how it might be taxed.
Right. Right.
Okay, so they've positioned this so that it's about 6 times the yield on the S&P 500.
I see. All right.
Okay, so the yield on the S&P is, 1/6 of this.
Okay.
The other thing that they've done here is, and this is where the upside comes from, they have basically a perpetual option to convert the preferred stock into shares of the underlying company, which is MSTR strategy.
Right.
Okay, so you get your 8% dividend coupon every quarter. Okay, and then you have upside to MSTR. Why do you want upside to MSTR? Well, MSTR, as many people may know, is the world's largest corporate holder of Bitcoin. So if Bitcoin goes up, then MSTR stock should go up as well. And so therefore, you're tying your investment here sort of indirectly to the rise and fall of Bitcoin. Now, when they first offered this, they offered it at $80 a share. So it was effectively yielding 10%.
Okay.
But the par value of these investments is 100 on all these, 100.
Mm-hmm.
So they offered this at a discount to entice investors to buy it.
Right.
And if you recall in that first chart where I showed the yield came way down
Right.
and the security actually was priced at par for a while. So it's 8% dividend if the stock was priced at par.
Hmm.
If it's more or less than that, then the yield could be higher or lower depending on where the price is.
Are they
Okay, but this,
are they regularly offering more of these, or is the only way to
yes.
buy it is on the market? Okay.
Yeah, they're regularly offering more. They have something called an ATM. It's actually kind of a great name. At the market offering, they can issue more of these at any time.
I see.
And actually, this is a way that they can do it. If the price kind of gets carried away and there's a ton of demand, they can sell more into the market and kind of manage the price a little bit.
Got it.
Okay. So you can see here when after they first launched it, it went up 34%. They priced it so attractively.
Right.
People said this 10% yield is great. And they bid the price up. So it started to yield more like 8%. And actually here as of the end of July 29th, it was 7.5% yield.
Mm-hmm.
Okay. So it even went above par for a while. Okay. All right. So who would be interested in this? Well, the company thinks that people that invest in the S&P 500 should be interested. Again, this is a way to get some growth, but some income along the way. So that appeals maybe to a regular stock investor.
Hmm.
Also, NASDAQ 100. People that invest in commercial real estate. A lot of real estate does not cash flow at 8%. So this is appealing potentially for those investors.
Hmm.
Okay. That might have a yield of 4%.
Sure.
And then they're saying that investors invest in hedge funds or Bitcoin directly or some of these Bitcoin exchange traded products. So, a pretty big market that they're going after here. And so far they've issued about 1.3 billion of this. Okay.
Right.
And at this time they put these slides together, it was yielding 7.5%.
Got it.
Okay. But if you want to know exactly what it's yielding at any time, the company has a website, strategy.com, and you can go and click on the security. Here's STRK.
Hmm. Hmm.
And when I did this, this was as of November 23rd. So it's a few days old, and by the time you air this, it might be even older than this.
Mhm.
But at that time, the effective yield was 8.5%
Okay.
because it was trading under par.
Right.
Okay.
Yep.
It pays its dividends quarterly. So the next dividend is due at the end of September. Okay. So there's lots of good information on their website. It's in real time.
Okay. So my first question, I have to get this one out because I'll
Yeah.
forget. So per the example that you've already shown us, there's a tendency on the part of any investor to seek a certain yield if they're saving.
Yes.
And that's based, as you pointed out, on time, which is a risk,
Yes.
based on the riskiness of the investment itself, and it's based on, in fact, interestingly, I didn't do this on purpose, but I had just asked Grok how you could calculate the value of 10-year bonds using other information, which typically I thought was mostly how many points above inflation the expectation is over the next 10 years, which Grok agreed with me. That is definitely projecting inflation over the next 10 years and being 2 to 2.5% above that is where the 10-year bond is generally going to float. There was a couple of other methods that you could use to get to where sophisticated investors are trying to figure out the value of the 10-year bond. So why would these particular secured vehicles be any different in that regard? Wouldn't people still be looking for that same return, only maybe a little more because maybe they see it as riskier? How does that play?
Yeah. Generally, in the fixed income market, you price everything off of treasuries. Treasuries are perceived to be the risk-free asset.
Okay.
I would actually begin to challenge that notion.
Well, that's a whole other show.
Yeah. Right. So that we could just leave that statement there. But normally, you would start with the risk-free asset and then figure out how much extra
Risk.
spread, how much extra risk that each security is.
Okay.
Okay. Now, in this case, again, you're getting that 8% dividend coupon on an annual basis right now, effectively yielding 8.5%. So let's call it 8.5%. If you bought it today, you're locking in that.
Right.
And then from there, you've got the upside potential. So it's a combination of sort of growth and income.
Hmm.
Okay. Now the question is 8.5% enough to compensate for the extra risk that this security represents?
Right.
Now, that's going to depend on a number of things. One, it depends on your view of Bitcoin as an asset,
Hmm.
right? So imagine if this was backed by gold.
Right.
Most people would probably say, that's awesome. You've got this collateral. Gold, I understand. Gold's been with us for 2,000 years, right? People value that,
Hmm.
right? Now, here we're introducing a relatively new asset that a lot of people aren't as comfortable with.
Hmm.
Now, there are a lot of people that have studied Bitcoin and they say it's actually better than gold. But if you're not at that point yet, then you might view this as being more risky.
Hmm. Hmm.
So that's kind of where that matters in terms of the value of the collateral and how much do you trust that?
Okay, so then the two things that come to mind right away that would impact my return would be, one is if the market in general pushes Bitcoin up,
Yes.
let's say let's just for fun say that Tom Lee is right and Bitcoin doubles over the next few months.
Yeah.
What happens to the share price of strategy? I'm sorry, of these different preferred securities if the value of the underlying product goes up,
That should help because then the value of the collateral is increasing.
right?
And in addition, Strike actually would also benefit in another way because the collateral is increasing, but also the equity value. See down here, it says equity component,
Okay.
34.8%.
Hmm.
The equity component will continue to increase.
Hmm.
And so then that conversion feature where you can take 10 shares of Strike and convert into one share of strategy stock would have more and more value.
So then the value of your share price in this case would go up,
Yes,
which would mean that the yield for the new folks that are buying it from you goes down.
that's right.
Okay. All right.
Yeah.
So So the time to buy it is now. Anyway,
Well, if you have a favorable
right,
view
right,
of Bitcoin
right,
and you also want to get some income along the way, yeah, you can lock in this 8.5% yield right now.
right, right. Got it.
Yep.